PayPal and Amazon. That is what we are speaking about here today, folks. I made some huge moves here today. I got to show you what exactly I did. We obviously got to talk about both these stocks. They're quite meaningful positions, positions I've been building out the last few months and plan to continue to build out. So we're going to speak about those. We will touch on Apple's earnings just quickly in this video, and we will talk about one stock that's a pretty extraordinary, interesting opportunity out there. Now, by the way, don't think I fell into depression because I'm not very excited for this video here today. It's just like yesterday, my health kind of deteriorated as the day went along, and it just got worse and worse. And I basically was in bed for probably about 18 or 19 hours straight. And so, I'm feeling a decent amount better, which is obviously why I'm able to record this. I'm sitting down to record this video. I can't even stand up where I usually stand up. But yeah, I should be better hopefully tomorrow or the next day in terms of back to normal. So PayPal obviously down big here today, down about 12%. Amazon's shooting up big after hours, up 7% plus. I wouldn't be surprised if it's up a lot more than that tomorrow. And I made some huge moves in regards to one of these two stocks here today, okay? Now, I got to be honest, today I got pretty lucky. I was only down about $14,000 or so in the public count here today. That's pretty fortunate. This was one of those days that could have been like a $50,000 down day, a $100,000 down day, and to only be down 14,000 or so, I'll take it. I'll gladly take it because this was one of those days. But at the end of the day, when it comes to that portfolio, it's a $1.8 million plus portfolio, right? But a lot rides on these two stocks, Meta and Tesla. And so if those two stocks hold up, they really hold the whole portfolio. On the flip side, if they go down, they hurt the whole portfolio in a substantial way, right? And so that portfolio is really driven by these two stocks. And it's not because I put in so much to these stocks. It's because they've gone up so much, right? Tesla, we've about 1,000x our money on, right? Or 1,000x, made about 1,000% on our money on, right? And then Meta is up, $300,000 plus in this account. So these positions just got so big over time. It wasn't like I, planned to build them that big. And, I look at a stock like Revolve. Even Revolve today, they reported dumpster fire of a quarter. And, the stock only went down 5%. But the question you got to ask yourself, how does a stock like Revolve report a dumpster fire of a quarter, and it only goes down 5% here today, okay? I'll tell you exactly how. When you are a beaten down dog stock, and, everybody that pretty much wanted to sell a stock has already sold that stock, that's how a company like Revolve reported net income down 50% plus year over year, revenues that went down for a company that usually is a double-digit grower. And also everybody's looking at the future and they're saying Revolve has much brighter days ahead. Then obviously this past quarter, the business is troughed and now things get better. That's the belief, at least out there, which is why that stock was only down 5% on a dumpster fire quarter. I mean, if that was a high-flying stock, that stock would have been down 30-40% today, but it's not, right? The dividend-only portfolio, where I only have dividend stocks, the account was about break-even today. This is a win. Today, on a day like today, this was a win for me. It was down $5 here today on a $177,000 portfolio, and that was after Qualcomm, which is a dividend stock I hold in that portfolio. They reported a dumpster fire quarter. Really, really bad numbers out of Qualcomm. I don't know if you guys got to see that report. I went over the report. In yesterday's video, the numbers were bad, man. But the dividend portfolio is really driven by these four stocks here: Nordstrom, Tapestry, Wynn, and Foot Locker. And so that portfolio really goes up and down based upon these stocks, and those stocks did pretty decent today, okay? Now, a friend sent me this, and I thought this was really, really valuable to everybody out there, is now all the big dog companies have reported earnings, okay? So now here's a look at the big dog companies and kind of what their revenue growth is looking at year over year, right? So first off, the three biggest positions I have in the public account are all the companies that are growing fastest in the world right now in terms of big tech companies, which I'm very, very thrilled about, right? Tesla's 47% growth this past quarter, and that's incredible considering the interest rate environment we're in right now. Meta, 11% growth. Amazon, 11% growth. We'll dive deep into the Amazon numbers in just a moment. I got some really interesting things to show you guys. Microsoft, 8% growth. Google, McDougal, 7% growth. If we look at Netflix, 3% growth. Apple's actually shrinking their business. And if I recall, they had an extra week in this past quarter, if I think so. So their numbers could have been worse than that, but nonetheless, Apple's revenues are going down, and then AMD had they're really disappointing. The one big dog actually left to report of big tech land, NVIDIA. That's the only guy we haven't gotten yet, okay? Now, let me touch on Apple real quick because I think it's kind of disingenuous if I don't talk Apple, considering it's the biggest stock in the stock market and they just reported earnings an hour ago. Apple, it's bad. iPhone's down 2% on a year-over-year basis. Service is really the only, bright spot for this company right now. It's really saving the whole stock and saving the whole story around Apple. That was up 8%. Mac's down 7%. Other products was up 2%. And iPad was down 20%. A huge move down for iPad there for the company overall. Stock not moving down big. And I think, I've seen it down 1 to 3% after hours. The reason being is just a lot of people look at this stock very differently now than they did in the past. And nowadays they treat this stock in a whole different category. Stock trades rich, right? It's about a 30 forward P or so, right? That's a rich valuation for companies that's revenues are going down, right? It's certainly not cheap. But the way people look at this is they look at it very similar to this stock I'm about to show you. Its name's Costco. They look at it very similar to in Costco, where, people just say, hey, somebody's iPhone's going to break, they're going to go buy another iPhone, right? People are just going to keep spending money on services and for the cloud and for apps and all these different things on their device, right? And if their MacBook breaks, they're going to go buy another MacBook. So it's just seen as like a consistent business. It's not the Johnny Ive, Steve Jobs Apple nowadays, right? It's just seen as like, it's just consistent, right? It's Costco. Costco, people are going to go, Costco's not going to report the most insane revenue growth, certainly, right? But they're a company that, is going to put up their numbers, and you go there on a Saturday, Sunday, well, just about any day, and the place is going to be packed, right? And you're going to have all these people getting gas. And so people put a stock like Apple in the same category that they put a stock like Costco, and Costco trades rich, right? Costco trades at like a 35 times next year's earnings. That's extremely rich in the market, right? But people say this is just stability. You're paying to park your money in a stable stock that hopefully can grow EPS each year for many years to go in the future, right? PayPal. So obviously stock's down a lot today. It's down about 16% year to date. We're having some pretty good discussions inside the private group here today about PayPal, bullish cases, bearish cases, just kind of talking about the stock overall. And I said, let's talk about some of the risk factors. And, I said to everybody, feel free if you guys can talk about, if you have other risk factors. And so these are kind of the three main risk factors I talked about. One was competition, right? PayPal's done a really good job fighting the competition for the past 10 years. But there's always a lot of people that want to try to eat PayPal's lunch. They own PayPal, Venmo, and obviously Braintree, and all those have competitive threats. The number two thing's a major recession, right? But that's a risk factor that's not just for PayPal, that's for every stock in the stock market. The number three thing is the new CEO does like a bad job running the company. Because obviously they got a new CEO incoming at the company, right? That will probably be announced. Who knows? It could be anywhere from a week from now to a few months from now. We'll see what happens, okay? So those are kind of the three main risk factors I see for the company, right? And then, we're also talking about this because there's not many negative points you can point out for PayPal, but one of the very few negative points you could point out was that active users went from, it was about 435 million a few quarters ago to right now active users, if I recall, is about 431 million roughly, right? And as a true, but that's like the easiest thing to grow, right? They could add different things, like if you download Venmo or PayPal or use it, you get $5, $10 free as a new user, or if you connect a credit card or something like that. There's so many ways, and this is what, companies in the finance space have always done this, right? And I even remember, JP Morgan back when I got my first job, my first official job, I should say, right? I worked for my dad's pool business for like 100 years. But when I got my first official job, when I was like 18 years old at Einstein Bagels, I needed to set up a bank account, right? And JP Morgan offered basically at that time, this was like 2008, they offered basically if they would pay you $250 if you set up an account with them with direct deposit. And so I did that, right? And I've been a JP Morgan customer for, ever since, right? And so there's always a million ways you can. Robinhood's done a great job of that over time, basically making it free to do trades on Robinhood, right? Free to do options. Like, they were the game changers and the game setters in regards to that. So there's always a million ways you can grow users in terms of if you just want to focus on user number. But then, like I said, well, do you want to focus on just growing a bigger user number? Or do you want to focus on, the profit per user? And I think that's a fair discussion that we have to have. Now, In regards to this, I think a lot of people can get lost in kind of the nitty gritty of, user numbers, this and that. But let's not forget, this company is a growth engine, and a growth engine substantially. They grew total payment volumes last quarter. In a weak quarter, remember, Apple's revenues are going down this past quarter. PayPal's total payment volume up 11%, net revenues were up 7%, operating margin was up 432 basis points, net income on a GAAP basis was up 400 plus percent, and EPS on a GAAP basis was up over 400%. So at the end of the day, PayPal's a major growth engine, and I think we shouldn't forget that. And the best part is, it sounds like, based upon their guidance in their conference call, it sounds like business is going to get better moving forward rather than worse, right? And the other thing we can't forget with PayPal is the valuation is extremely cheap, which is what's so attractive to me. If PayPal, if PayPal was trading at a 35 forward P today, it's not nearly as interesting to me, because then I'm like, well, they priced in a lot of growth. It's kind of trading, up there with like a Visa or even higher than a stock like a Visa, and so I'd kind of say, it's not as intriguing, right? Trading at a 12 times next year's numbers, yeah, I think for a growth engine like PayPal, I'll gladly take that, right? So there's a few moves I made in regards to PayPal here today, and I want to speak about those moves, and they're pretty substantial moves, okay? So first thing you guys know is I don't really like doing much in regards to options other than using options to hedge my portfolios a bit. But there is something I did in regards to options here today. And it's pretty rare to see me do something like this, but I did do something. Okay, I spent $7,700 on some PayPal call options here today. My break-even's $90 on this. These expire right before 2026. Okay, they expire December 19th, 2025, so I have a little less than 2.5 years to work with here. My break-even's $90 on these. Each $15 above $90 is where things get really, really fun. So there's a few ways I can do this, right? I could hold these for the next year or so. If PayPal goes on a beast run, I could take my profit then at that point in time. Or I could just say, you know what, I'm going to hold these all the way until we get to nearly 2026, and I'll sell them as close to the date as possible, right? And at that time, hopefully PayPal's, stock that on the low side is $150, or maybe on the high side it's $250 plus, right? And if that's a situation, you can run the math on it. It's going to be a pretty profitable situation, right? Obviously, the risk is PayPal doesn't do anything over the next several years. We'll see what happens with that, right? Now, the interesting thing is, if I bought these options yesterday, they would have cost me almost $11,000, and here today they cost me about $7,700, right? So I think I got pretty attractive pricing on this, and I really like the risk reward this has for me overall, right? And I also bought a bunch of shares here today, okay? I spend $14,000 roughly buying about 215 shares. In the public account, I paid $64.77 for those shares. So obviously, in terms of my main position in regards to PayPal, it's just shares straight up. But yeah, I do wish in regards to seeing Meta last year, I do wish I'd just bought, not a lot, just like $20,000 or $30,000 worth of calls, which for me is not like a big amount, right? But the risk reward was so dang attractive back in Q4 2022. But I was so risk adverse at that time, I didn't even consider like just a small portion over the calls, because that if I did let's just say 25K in Meta call options last year, those call options today would be worth anywhere between $250,000 and $500,000 based upon the strike prices I would have bought. So, looking back, hindsight is what it is. It's just like, sometimes if you get an extraordinary valuation story, that's a growth story. And, you just a little capital over there might make a little bit of sense for something longer term, right? Now, in terms of me, in the public account, I'm up to 1,620 shares. I have more shares across other accounts. So my thing is, I'm going to buy this stock aggressively through year end. I'm not going to, stop buying the stock anytime soon. There's just a buy. And, I don't know, I might even buy it into 2024. The good thing for me with PayPal is the stock would have to pretty much double from here for me to say, okay, let me cool it on buying and just hold now. It's so far away that I'm going to just be able to continue to buy the stock aggressively month after month after month after month for quite some time here with, in my opinion, very little downside risk and quite substantial upside risk. Now, the reason I'm buying so aggressively is a lot of times what can happen in the stock market, and this is just a little gem for everybody out there, Stocks can lull you to sleep. They can kind of hypnotize you into thinking you have more time than what you have to add it. And usually this happens when, a great company is for going down for a certain amount of time for whatever reason. Maybe the whole market's bad. So maybe, you're in a stock market crash scenario, right, which was similar to what we had in 2022, especially when it came to tech stocks. I mean, the NASDAQ was down about 37% peak to trough last year, right? So that can be a scenario that the market goes down for a year and a half, and it kind of lulls you to sleep, and you think you have more time to buy than you really do. A lot of people got caught off sides this year with that, right? Everybody going in this year thought stocks were going to go lower. They were in no rush to buy Apple and Microsoft and Amazon and Meta and Tesla and all these stocks. And they've missed, 50% gains, 100% gains, 200% gains. And now they're still trying to figure out, do I jump on the train now, or do I try to wait and hope the stock goes down? It's a horrible position to be in. It can also happen if the company just in general is going down, okay? And a good example of a stock that lulled a lot of people to sleep and they thought they had a lot more time to buy Meta than they really did was Meta, right? The stock went down for 14 months before it finally bottomed. 14 months. In stock market years, that's 100 years. That seems like forever, right? And so what happened with Meta? A lot of people thought, stock's just going to keep going lower because, hell, it did it for 14 months, so why wouldn't it keep going lower? And so a lot of people took the position of, I'll buy it when it goes to $20, to $40, to $60. I'll buy it next year. It's got more to go down. And it was like, you look at the valuation of the company, the PE it got down to 10 on the company, 12, something like that. Literally, the PE got down, the forward PE that is, got down to like 10 or 12. It's like, are you kidding me? That's exactly what we have going on with PayPal right now. That's silly for a company like this. That's a growth company long term, right? But people praise these stocks on the floor, and they think they have forever and ever to buy them, and they think it's just going to go lower for all of eternity, and then they, get caught on the other side of this, right? And so when I look at a stock like PayPal, right, the stock's down for 24 months right now. And a lot of people think they've got all of eternity to buy PayPal. There's no rush to buy this stock, nothing like that, right? And usually that's when you kind of get caught on the wrong side of things. And so for me, over this next 6-month period, I am going to add as aggressively as I possibly can when it comes to PayPal. You're going to probably see me buying this stock almost week in and week out for the next 6 months. Literally, I'll be buying the stock week after week after week. I'm not going to be lulled to sleep in this one. The risk reward is way too dang attractive here, okay? So that's PayPal, folks. Very, very excited about the long-term trajectory here. I do believe PayPal will be a $200 to $300 stock over time. It's not happening tomorrow, but I do believe it's going back there. And I believe the chances I lose money in the stock over the next 24 to 36 months is extremely low. So the risk reward for me in regards to PayPal is just it's as attractive as anything in the market right now. From kind of that standpoint, okay? Now, before we get into Amazon, what I'm up to in regards to Amazon, am I going to be buying the stock, selling the stock? Obviously, it's spiking huge. I've made really good money on Amazon. We'll speak about that. We'll go into the numbers in just a moment. I want to just point you guys out to a very interesting stock that I saw crash today, okay? And the interesting thing is this stock is not trading very rich whatsoever, and it could be a potentially interesting buying opportunity. I got to do more digging on the stock. I don't personally own it right now, but I thought I would at least draw you guys' attention to this in case anybody out there wants to do some research on this one. And this stock is Expedia. Expedia stock crashed today. It was down over 16%. And I saw this and I said, let me look into Expedia just, kind of surface level here. I saw it was trading at a forward P of like 11, roughly, somewhere around there, based upon what it's trading at here today, right? And I saw it expects to be a very nice growth for the company. So I don't know. I'm going to have to do some digging on Expedia and see what's going on there, because it's actually a pretty extraordinary potential opportunity, okay? Now, Amazon. So Amazon's my number 3 biggest and most important stock in the public count. It's, right after, obviously, you got Meta, the most important. Tesla's the second most important. Amazon, third most important, right? So stocks up big after hours, right? Does it deserve to be up big? Yes, it actually deserves to be up 15 to 20% tomorrow. If the stock's up 15 to 20% tomorrow, that's the move it should be making. Anything less than a 15 to 20% move in Amazon shares tomorrow is actually too modest, okay? They destroyed earnings. They destroyed everything, okay? Amazon reports blowout profit beats on sales and issues optimistic guidance. Amazon, and by the way, Amazon pretty much always sandbags guidance. So if anything, whatever number they're putting out is probably lower side than what they're actually going to report. So it's just something to keep in mind, okay? Amazon report showed a return to double-digit revenue growth. The company posted its biggest earnings beat for its report in the fourth quarter of 2020. Amazon, 65 cents of EPS versus 35 cents expected, right? They destroyed EPS, right? Profitability of this company is going through the roof. Who's the one person that called this? Right here. If you've listened to me for the past 6+ months on Amazon, I told you guys, starting back half of the year and going into next year, profitability is going to skyrocket for this business model. And I went through all my bullish thesis on why the profitability is going to skyrocket for this company and why Wall Street's wrong. Guess who got it right again? Okay. Wall Street's way too conservative on their numbers, and they just got embarrassed here today. Absolutely embarrassed in the biggest way possible. The numbers are insane. Profitability for Amazon is going up way faster than really anybody anticipated other than me. I'm literally the only person that expected this, okay? Revenue came in at $134.4 billion. That's almost a $3 billion beat for the company. That's incredibly impressive, especially coming off of a goods recession, which we're now coming out of. That's very impressive. Amazon Web Services, $22.1 billion versus $21.8 was expected. Advertising business beat as well by about $300 million there. For the third quarter, Amazon expects sales of $138 billion to $141 billion. So we could say $140.5 billion, somewhere around there, roughly is the midpoint for Amazon's expectations, or growth between 9 and 13%. Analysts were expecting revenue of $138 billion. So here we got Amazon expecting probably 140 to 141 of revenue, which is several $billion ahead of what the street's at, right? The guidance reflects the strength of Amazon's 48-hour Prime Day discount event held in July, which the company touted as its biggest ever. Yeah, from what I heard, it was insane, man. The company reported net income of $6.7 billion, or 65 cents a share, after recording a loss of $2.20 a share a year earlier. The year-ago loss was a result of a markdown on the company's investment in Rivian, which is exactly what I told you guys. That's all wearing off now, and so be expecting that their profitability is going to skyrocket, right? Now, if we look a little deeper in the numbers, it's green everywhere. Net product sales were up substantially. Total services sales were up substantially. I mean, over $10 billion on a year-over-year basis. We're looking at total sales up a little over $13 billion. Meanwhile, as far as total operating expenses was up a little less than $9 billion. Well, guess what? You tell me you're telling me your revenue's up that much, and you tell me your expenses are only up that much. I'm going to say your operating income's going to explode, and that's exactly what happened with the company. The operating income was up about $4.3 billion on a year-over-year basis, which some people say operating income's the most important thing to look at with Amazon. Some people say it's free cash flow. Everybody's got a different opinion, okay? For me, it's always forward P based upon what I think your future growth rates are, and then running those P metrics out several years and saying, am I getting a steal deal on the stock, okay? Net income for the company came in at $6.7 billion, right? EPS obviously exploded for the company. And here's the best part with Amazon. This is the best part. The stock is trading way cheaper than anybody thinks right now. Based on what analysts have, which analysts are completely wrong, based upon what analysts have, the company trades at about a 50 forward P, which looks very rich. The market in general trades under a 20 forward P. So the fact that Amazon's over 50 looks extremely rich. But here's the thing. The company just almost doubled up what analysts were expecting for EPS. So the profitability you're going to see from this company over the next many quarters is going to be far better than anybody's anticipating. So what you're paying for Amazon is actually a much cheaper price than you think you're paying on surface level. And that's what makes Amazon extremely attractive stock right now. And it's one of the few stocks in the stock market that I could say, you think you're paying a rich valuation for it. You think you're paying an expensive price. You're not. You're actually getting a steal deal on this stock, even though it doesn't look like it on surface level, okay? Now, to dive a little bit deeper, I don't know if you guys saw these sales numbers. Operating income in North America came to $3.2 billion. That's versus a loss in the same time last year, right? International loss got cut substantially. Now, I had that in blue, not green. The reason being is it's still a loss. they're going to flip profit. They're going to flip to profitability in international. There's no doubt about that. They're not there yet, but they will flip to profitability. It's just a question of, are we waiting, a few quarters for that? Are we waiting for a year for that? That's the only question. Amazon Web Services, here's the best part. Amazon Web Services is actually a holdback for the company profitability-wise, because obviously they're spending a ton in AWS right now, so the operating expenses climb quite substantially. AWS looks like it's going to get back to very nice growth. And so, if anything, I think their operating income can actually start going up at the end of this year and going into 2024, which is going to be fun because that's just another huge boost on the profitability. And I mean, imagine usually AWS's operating income is just going up and up substantially. Imagine what this operating income is going to be a few quarters from now, dare I say a few years from now, right? North America was up about 11% in terms of sales growth. International was up 10%, AWS up 12%. Very nice numbers, very nice numbers. As far as the balance sheet goes, they're now up to this is as of June 30th, so it's even probably stronger now. Total stockholder equity, $168 billion. That's from $146 billion as total stockholder equity at the end of last year, right? So in regards to me and Amazon, what am I up to here with the stock? Am I planning on cashing out some shares now that I have very nice profit on these? Am I planning on buying more? Am I planning on doing anything options related? So first off, selling, no, definitely not, okay? We'll speak about buying in just a moment. Options, no, I'm not as interested in Amazon options as I am something like a PayPal. PayPal, the risk reward, especially as of tomorrow, is just way more attractive in my personal opinion from a shorter term perspective, which options you're really putting yourself under the gun because of the time horizon, right? So that's why Amazon, it has to be such easy money for me to consider doing a call option on, because this is not something I usually do. It's got to be super easy money. So if I look at Meta last year in Q4 of 2022, such easy money. I should have been doing some calls. But look at PayPal right now, valuation where it's at, the growth story where it's at. I think that stock's going to easily be a double up, triple up type stock over the next couple years here. So Amazon, bullish, but I don't want to put myself under a time horizon. So am I buying it? The answer is yeah, I'm going to probably still be a buy actually. As of tomorrow in the public count, I'll probably be up about $30,000 to $40,000 on this stock, but the stock's still a damn buy. And so don't be surprised if you continue to see me buy more shares through the remainder of this year, folks. And I could buy Amazon on and off for years to go in the future, very similar to how I've done with stocks like Meta and Tesla. Don't be surprised if Amazon one day is a $500,000 position in the public count or so. I appreciate everybody joining me as always, folks. Thanks so much for being here. I put together a free workshop for you guys a few nights ago when I was actually feeling good. That's free to access. That's pinned comment down there if you want that access to that. It's about a 28 to 30 minute video. How I find 10x stocks. It should be very helpful to you. I drop a lot of gems in that one. I appreciate everybody joining me as always. Thanks so much, folks. Thanks for being subscribed and have a great day.